Every Forex beginner trader dreams about building their trading account to the point where they can make a living from it. But having a small account and trading it efficiently from start to finish is a completely different story. So in this video, I will show you an effective trading strategy that will help you gradually grow your small Forex trading account. And if you can consistently apply this method, you may be on the right path becoming a full-time trader. But you know, dreaming about becoming a successful trader is not enough, as a lot of hard work must be done behind the scenes. One of the key elements is to backtest the strategy you're about to use without risking any capital. And if you're wandering around searching for the best backtesting platform, look no further, because TraderEdge will be your lifesaver. I switched from backtesting on numerous Excel spreadsheets to TraderEdge because it's 3 times faster, saving me both time and money. And trust me, TraderEdge is super easy to use, makes organizing data insanely simple, and has a built-in profit and loss calendar to help you track your trading performance, which I believe is super important, especially if you're a beginner trader. So I will leave a link in my description box down below, so don't miss out on resources that can definitely benefit your trading growth. So this strategy is based on one of the most important principles that I have learned throughout my trading experience, and it's the one that I always teach to my viewers, which is that you should always strive for a high quality setup that will deliver a high probability outcome. The reason for this is that you have a small trading account, and as a result you do not have the luxury of placing multiple trades at the moment. And if you did this, your investments might not have turned out as planned, because it's more than likely that you overtraded rather than finding a single reliable setup. Growing a small trading account is all about consistency, discipline, and sticking to the rules such as the one I mentioned, because consistency adds up to the big numbers over time. Although this strategy is based on 2 exponential moving averages, like any other strategy, it has to be combined with analysis of price action and appropriate risk management, because we cannot just throw indicators on the chart, apply the entry rules, and start executing trades, right? And I know for a fact you're going to ask me this in the comment section, so I already have an answer for you. Which currency pairs are the best for trading using this strategy? Always remember that the major currency pairs are the ones that have the highest liquidity, because they are the ones that are trading most frequently. So I highly recommend sticking with them. Also, this trading strategy can be applied to any time frame you want, but in this video we will focus on the 1 hour chart. So let's begin by opening TradingView and starting to look for the pair that is trending up or down, as we really want to focus on the price action first, rather than having indicators and not understanding the reasons behind the trade you're about to take. Once you find a pair that is strongly trending up or down, begin by drawing your trend lines, support and resistance zone. And if you take a look over here, this would be a great trading scenario. This is AUD USD on the 1 hour chart. We can see that the price is clearly trending down, as with each drop down it made a new lower low, and every single time it shot towards the downside it was rejected by this trend line. But we also have this steep uptrend over here, which is giving us a hint that the buyers are slowly stepping into the market. However, this uptrend is not enough of a confirmation that we will definitely break this downtrend and shift towards the upside. But if I draw an area of a resistance just like that, now we have a much better picture of price action, and this is an ascending triangle pattern, which is a bullish continuation pattern that indicates that the buyers are more aggressive than the sellers as the price continues to make higher lows. We may also identify this additional structure over here, which actually makes sense to be identified, because this was a previous resistance that now stands for support. And if you look over here, you will notice that after the zone of resistance was broken and turned into support, the price shot up, pulled back to the area of sensitivity, and then again it moved towards an upside at least like 130 pips until it reached the next area of sensitivity, which is our resistance. And I believe this is a fair point to make, that history tends to repeat itself, which is I believe this would be a great opportunity to buy. So the main and most important job is done, and now it's time to add 2 exponential moving averages to your chart. You can easily find them by clicking on the indicator section in TradingView, but if you're using MetaTrader 4 or 5, they will be under the navigator indicators section. These moving averages default value is 9, so make sure you don't forget to change the second EMA to the value of 20. And the next thing that has to be done is to wait for the price to break the downtrend, and in this specific situation it also needs to break the ascending triangle pattern that we have identified. And for your entry point, it needs to be determined based on the candlestick that has fully closed above the EMA 9 and 20, so for example over here. Following a successful breakout over the resistance of the ascending triangle and a downtrend on the 1 hour time frame, the price has pulled down and closed above both EMAs. So your stop loss should be set below both exponential moving averages. This will give a little room to move after your entry, but you can also set it around this zone since this is where our support stands. And for your profit target, ideally you want to hit 1-to-1 risk to reward ratio or something close to it, and this is a AUD USD example. This area would be a valid reason to set it up because we might expect a bounce, but until then we can definitely bank some pips. And the key to a successful setup is to also keep an eye on the big news for that day. If there is a news announcement or high volatility event coming up, the market can get crazy insanely fast. So it's important that you avoid any sudden news spike and wait for it to pass before you execute any trade. So I actually took this trade yesterday based on the setup that I just explained to you, and as you can see, the trade reached over 70 pips in the profit, which I'm extremely happy about. I closed the trade at 70 pips because there was a potential risk to turn around based on the resistance zone over here, but as you can see, AUD USD did not hesitate and shot another 50 pips in the profit, and that's what I call an effective way to trade EMA 9 and 20, which can provide you a high quality setup that will result in a high probability outcome. And as always, if you enjoyed this video and you find it really helpful, don't forget to like and comment down below. Join my trading community because we're literally smashing the market. Thank you for watching, and I will see you in the next one. Bye!